Question is, we've started positively. Can we maintain it?
It was a great day for the Australian share market, especially given what we saw over the long weekend. And if we have a look at the performance of the US market over the long weekend, we actually saw a fall of 1.3%, so quite a sharp fall. So it wasn't surprising to see our market start off in negative territory. We did see oil prices falling, gold prices reached a 3-week low. So the energy and the material sector coming under pressure quite early. But of course, that Chinese data really just changing everything. The market had been quite nervous, especially in regards to inflation, as well as a slowdown in China, and the numbers certainly didn't reflect a slowdown. We saw industrial production coming in ahead of expectations, retail sales coming in on expectations, and fixed asset investment coming in above expectations. Of course, a big number were the CPI, or the inflation numbers for May, and we did see it come in on expectations at 5.5%. Inflation is still accelerating, though. We are seeing this at a 34-month high, so rate watchers are watching pretty keenly for a rate hike in China. But altogether, the numbers really coming in or above expectations helped our banking sector. If we have a look at the Australian banks, often their asset quality is seen being supported by the Chinese growth story. So the fact that we did see some good numbers coming out of China, helping those banks are recovering. We saw a good bounce back there. So altogether, a good day for the Aussie share market. But in terms of technicals, we did see a new low at 4,511 points early on in the day, but some strong support emerging around that 4,500 point level.
We mentioned before in terms of the technical aspect of where our market's at the moment. We've been speaking for a while now about 44.77. That's that low of the year around the Japanese disaster time. There was talk earlier today when we opened that again potentially be on the radar. 46, the upwardly looking level. What are you looking at now, since we have seen this 0.5% increase?
There are pros and cons at these levels. We know that there is strong support at 4,500 points. In fact, the market has bounced off this level many times in the last couple of years. So when we come to 4,500 points, we do see traders less likely to put on short positions and probably close out some of their shorts at these levels. We're seeing Charlie Aiken, who has a big following, calling at the end of this correction around these levels, saying that 44.77 should be the key support levels here. But for most traders, they're going to wait till that downtrend line is broken first. And if we have a look at the downtrend line, this is their 52-week chart, you can see that we need to see a break of about 4,600 points first to really see a clean break of that correction that we've seen since now the peak in April. So altogether, if we have a look at the market, some clear support levels are emerging, but I guess traders will have to wait for that break of that 46.25 mark to see a high probability that that correction has now ended, and this isn't just another continuation of that downward trend that we've been seeing.
If you like, in terms of potential impact from the New Zealand earthquakes, they say it's a little bit too early to assess the actual impact. You have to imagine there'd be some amount of an impact, though.
It's not surprising that it's too early to assess the impact of that New Zealand earthquake, which happened over the long weekend. So it is a very short period of time, so we will expect to hear an update within the next week. But at the moment, they're probably just trying to deal with claims. Excluding that New Zealand earthquake that has just happened, they did reinforce that they are looking at insurance margins, so reiterating and working towards an insurance margin of 8 to 10%. It does look like Asia will start to play an increasingly bigger role by 2016, they are expecting that Asia will be responsible for about 10% of the gross written premiums. And the UK business, of course, are very firmly watched by a lot of investors of Insurance Australia Group. It has been a problem for a lot of the insurers, but working towards breaking even next year. So altogether, that update, it does look like did have a positive reception, but if we have a look at Insurance Australia Group, really just trading in line with the market with a rise of 0.6%.